Welcome to Markets Now. I'm Michelle Rook along with Randy Martinson Ag. We had a higher opening in the grains this morning, which is continued here as we start the early part of the session. Over in the livestock, cattle are mixed with live cattle higher, feeders lower, and hogs are lower as well. Randy, let's talk about the grain trade first of all. We got a lot of information that we're trying to sort through today in terms of this market. End of month, end of quarter, first notice day, weather, and by the way, big reports. So what are we going to trade?
That's a good question. I think right now we're trying to trade the weather a little bit. The storm that moved through Illinois, Missouri, and Nebraska yesterday. I think the market's seeing some reaction to that. We've also taken this market down pretty good. We've made more than a 50% retracement, almost 60% in corn and 50 in the soybean. So we're seeing a little technical bounces. This is in the markets as well. But I think once the report comes out, we'll trade that. If it's big, if there's big changes from what's expected, we'll continue to have that a little bit more, I think, in the forefront. But we're going to be taking a look at that noon weather. It's going to be a long weekend for a lot of traders, too, because next week's the 4th of July holiday. Monday's a full day, but a lot of traders won't come back for it because Tuesday, of course, is off. So it's going to be interesting to see how all this goes and just what kind of position squaring we have after the numbers come out.
Yeah, and how much have we traded coming into the report already? Because we've taken a lot out of this market already. Trying to add it back on here today on the July contracts, and we saw a little proof of that in July soybeans yesterday. It's first notice day. So is that a squeeze play here as the commercials chase the July contract to try to take delivery?
I think it is. I mean, we know a lot of the elevators have moved. We got an inverted market, so a lot of elevators moved their cash bids out, a while ago. So right now, it is basically just the commercials that are trying to finish up their trading with what's left of the old crop or what's left of their July book. So I think that's what we're seeing with the July contracts. It'll be interesting to see where it finishes out, but a lot of the attention will flip towards new crop once that the report comes out at 11.
Yeah, we didn't have any deliveries there either, so that was interesting to watch. As far as the rumored China business, well, we thought maybe that was going to be old crop. We did see 4.85 million bushels of soybeans this morning reported as far as exports, but it was new crop, wasn't it?
It was new crop. So, yeah, a little disappointing that they're already flipping over to look at buying 23 crop and not looking at getting any more 22. So, and I know the trade was hoping that it was going to be old crop because we still need to try to encourage a little bit of buying there. Maybe China's got their needs met in the short term, coming mostly from Brazil, but Brazil is also shipping a lot to Argentina. So we do expect that China will come back into the market and buy some old crop beans yet from the U.S.
Okay, let's talk about the reports. The average trade guesses as far as acreage don't show much of a change from the March intentions. But like you said, this report has a big history of being a big market mover. And in 2020, this is really what started to turn that market into a bull market. Is it possible that could happen again?
Well, I think so because, and it's kind of the same scenario that could be playing out. And that is 22 or 2020. We saw a lot of prevent plant come into play that was not anticipated to see in the market. And we could see a little bit more prevent plant. Now, of course, up here in the Northern Plains, we're going to see less than last year, but I still think it's going to be about 10% or half of last year, which will amount to about 10 to 15% of the acreage. So I do expect that corn acres we're not going to see the increase in the corn acres or the spring wheat acres because of our late wet spring that we saw up here. And this is where they were expecting to see most of the new corn acres come.
Most of the new corn and soybean acres. And when you add up all the principal crops, a lot of question about how they got to that big number in the first place, right?
Right. There was a lot of question about that. And a lot of it was they were taking some prevent plant out, but where the rest of the acres were going to come from, we're not quite sure. But it's going to be really interesting to see when all this shakes out. I don't think that North Dakota, Minnesota, and South Dakota added 1.2 million acres more of corn over last year or 1.3 million acres of soybeans. So it will be interesting to see these numbers once they're released.
Absolutely. What about stocks? Any anticipation there? Because when you look at the average trade guesses, they are below a year ago, but sometimes you can get some big surprises in that quarterly number.
Exactly. And more so in corn because you got that feed, number that comes in there that has to be kind of backed into when you look at the numbers. And that could be a little bit of a surprise. I think, we had a pretty rough winter. We used a lot more feed than we anticipated. That could be a little bit stronger. That could lower the stocks a little bit. And that certainly would make an impact in the S&D numbers once the July numbers come out here next month. Now, USDA still hasn't made their adjustment from the last quarterly grain stocks report, so this one could exaggerate that number a little bit.
Okay, but if you look at what's been going on in the cash market, basis levels have fallen apart in corn while they've stayed really strong in soybeans. Is that already telling us what this stocks report's going to have in it?
Well, it's certainly given us an indication, and we do know that corn demand has dropped quite a bit, especially coming out of China. China's using their own wheat to, because of their adverse conditions with harvest, so they have a lot more feed wheat. So we kind of knew that we'd see a little bit lower corn exports in the short term. But Argentina is still going to be out of the game as far as exporting is concerned. Again, Brazil is shipping a little bit more into Argentina and filling the need. But at some point, they're going to be needing more corn later in the year, and we will be the market at that point.
Okay. And then we'll try to ramp up into the next WASD, and that's where yield will be kind of the big debate, won't it?
Yield will take a big limelight there. I mean, that's for sure. And right now we know that or expect that USDA is going to have to lower the yield, national average yield at some point. I don't know if they'll do it in the July report, but they certainly will have to make some adjustments by August.
Absolutely. Cattle market, live cattle at least opening a little bit higher this morning. Obviously, feeders under pressure with higher corn, but we did have some steady cash trade in the north in the cattle market. Do you think that's helping to support live cattle? We've had a good week here, or are we just building on that?
I think, cattle have kind of, live cattle have kind of, maintained themselves this week. They've been waiting for something to come. And I do think the cash market has been what's been driving it. A little concerned about the negative hogs and pigs report, but, as far as putting more supply on that, it could hurt the live cattle. But, we've got a big holiday coming up. We're hoping demand picks up a little bit. We're hoping that the packers come to town and buy aggressively this week or today to kind of fill in for what's going to be missing for next week. So I think that's kind of helping to drive the market, the live cattle market.
Yeah, that northern cash trade, as I mentioned, steady, but it's been pretty light in terms of volume. And the hogs and pigs report just a little bit on the bearish side. Those numbers all came in above expectations.
Yeah, it did. And that was a surprise, especially when you seen how bad that market got beat up here, that first half of 23. So I'm kind of surprised to see that, but the numbers were larger than expected. That will cause a little bit of pressure in the hog market.
Yeah, and we're seeing that already this morning. All right, thanks for joining us, Randy Martinson, Martinson Ag. That is Markets Now.